So much has happened here recently. I need to break it down for you. In the first aspect of today's video, we need to really break down what's happening with the stock market. It has gone up substantially. The second thing is the real estate bust. These two things are at odds with each other, and I'll explain why. The third thing is all to do with Europe. I've got a lot to cover. Let's begin. I first wanted to explain what I talked about a few months ago. This is the community or blog section of my YouTube channel, and I posted this. This was 2 months ago. It doesn't give an exact date, but it was a few months ago. Anyway, some are starting to say that a bottom of the stock market rout will be in October. So this was before that, okay? The economy will be weak into next year, however, and I say, we'll see. Many people said no, that would not be the case. Here we have it. I'm seeing more and more research indicating that we are getting closer to a bottom in stocks in the US. Real estate is a different story, and the economy itself is a whole different world. That's what I mentioned both, more than 2 months ago, and this is more than a month ago, highlighting the fact that we are seeing a time, and has to be, I wish I knew the exact date. If anyone knows how I can get that exact date, it would be good to know. But basically prior to October, and it just looked like that would be the case. Here we are right now today with the markets roaring higher. Dow climbs 20% from low as stocks rally and inflation fears ebb. We're not worried about inflation anymore. It doesn't matter what you're paying at the grocery store. It doesn't matter what your electricity prices are. Those fears apparently are gone, at least on Wall Street. Wall Street preps for year-end stock rally as volatility plunges. We have the Santa Claus rally. Generally around this time it is very positive. This year is kind of a little different in that way, but this is what the market wants to believe. Now, you had Powell come out, he had a little speech here, and I watched some highlights from it. And as they say in the title, it's very funny. Powell, Fed rate hikes moderation may come in December. That's the title, but you actually listen to what he said, and it will be what they consider to be hawkish. You listen to it. I mean, he's saying, okay, we have to do more about inflation. We have to get inflation down to our 2% target. We have to do what is necessary. Rates, the terminal rate, which basically means how high they're eventually going to get to, is going to be a level at which is higher than we thought previously, like one after the other, all what I would consider to be a relatively tough stance, at least for, these days. And yet, what happened? The markets loved it. The markets got what they wanted, you see, because the markets heard, all they heard was that we're going to get less of an increase in December. December 14th, pay attention to this channel. I will bring you all the details, okay? You want to hit that subscribe button so I can give you each and everything. Now, I want to look at what's happening with real estate, because you just saw stock market, loving it, doing well, up 20% from the bottom. This was highlighted and expected, I do believe. Now, that doesn't mean that this can be sustained far into the future. I didn't say that. What I said was that would be the bottom. Okay. Now you can flip-flop up and down. You can chop around. This is important just to address. I wanted to show you leading up into that. Now, here we have real estate. Housing demand, quote, vaporized after rates hit 7%, and a new wave of inventory is next. That's important because when you increase interest rates, you increase mortgage rates, and as a result, people can afford less. We know that. If they're spending more on their home, they're spending less on going out, they're spending less here and there. And there are really obvious signs of this. Stick with me, okay? I'm going to bring you those obvious signs in just 1 minute. But you can see that it has an impact on the real estate market. There is, a whole interview in here if you want to check it out. But look at it for yourself. This is U.S. pending home sales, both month over month and year over year. And look at that. Look at that year over year. Absolutely plummeting. Beyond what we saw in 2020, beyond 2007 and 8. We've never seen this type of drop. Everything was so hot, and now everything is not. Now, if you look at the total number of sales, you look like measure it on many different degrees, and when you go from so hot to so not, it looks so terribly in this fashion. But I just wanted to focus on the fact that it isn't the same market we had a year ago. And what has changed, I think you know. But of course, interest rates have been moving quite high, at least as we look back here. This is just a comparison giving us the pending home sales, that's the red line, and you look at existing home sales, which has basically following along with that. Okay, that's it for this. When you look at the PMIs, it's important. Manufacturing. Now, there's different groups that will put out this data, and when you look at PMIs, you're looking at manufacturing, and it gives us a little bit of insight as to what's happening with a different side of the economy. Okay, not just spending, and some only look at the stock market, which is weird as an indication of the economy and so on. But this is contracting really significantly. Anything below 50 is a contraction. Right now, 37.2. This is the Chicago PMI, and you could measure this in many different ways. When you look at data coming from all different categories, they're all contracting. They're all contracting right now. And that's why a lot of businesses say we are in or heading for a recession. More Americans, and this is the big one. This is the evidence you need. More Americans tapping buy now, pay later for holiday gifts show how stressed the economy is. This is it, my friends. You gotta be realistic. If you see what's happening with the economy, with credit card usage at record highs, you look at people starting to dip into their 401ks, dipping into their home equity line of credit, and now we are seeing the data for the buy now, pay later. Yes, maybe they're making poor choices. I'm not here to tell people what they're doing. If you want to do that, if you want to use your credit card to go buy a new flat screen TV, that is not my decision. And I just wanted to make it clear, when you look at this, isn't it so interesting to see at this time when they're telling us the economy is strong, when they're telling us the consumer is there, but then you have the actual evidence and it is anything but. To me, it's odd, it's unusual, but here's the data. Here it is. Now, let's look at this next one. When we see what's happening with Europe, different situation from a lot of places. Europe, I believe, is in one of the worst positions globally. In fact, I'll show you what Volkswagen, one of the top guys from Volkswagen, had to say about Europe, and it's quite shocking. But first, let me look at this. Finland suffers deeper contraction as inflation hurts consumers. That's Finland. That's just, one little small piece. As you can see, economy was basically heading down from the middle of 2021 into this point here. And it shouldn't be a surprise because other economies are seeing the same thing. Energy crisis fuels demand for Swedish wood-burning stoves. Europeans are anxious about war and power outages. Join long waiting lists for an artisanal heating solution that's existed for generations. Of course, a lot of people do this. I love the smell, by the way. And you could see that people are utilizing this because why? Because things are too expensive, number one. Because number two, they want to be prepared. They want to have this. Now, a lot of places are banning this. You cannot have a new home built with a wood-burning stove. They won't allow that. They'll allow gas, but they won't allow actual wood burning. So it depends on the area you live in, actually. Now, this is coming from the LinkedIn page of one of the top guys at Volkswagen, I believe. The fact is, on the international stage, Germany and the European Union are rapidly losing their attractiveness and competitiveness. The USA, Canada, China, and Southeast Asia and regions like North Africa are forging ahead. We are treading water. I am very concerned about the current developments regarding investments in the industry's transformation. This needs to be urgently prioritized. Europe lacks price competitiveness in many areas when it comes to the cost of electricity and gas in particular. We are losing more and more ground. Unless we manage to reduce energy prices in Germany and Europe will quickly and reliably investments in energy intensive production or new battery cell factories in Germany and the EU will be practically unviable. Do you understand this, my friends? The value creation in this area will take place elsewhere. Basically, we are in big trouble. We are going to lose out. Other economies are going to benefit from all of this, and we do not stand a chance. I mean, this is huge. Coming from somebody at Volkswagen saying this, which they, probably won't have a job tomorrow. But anyway, that's the point here. Look, Europe's biggest buyer of bonds is starting to think about selling. Who is it? Of course, the ECB. I think it's appropriate that the balance sheet is normalized over time in a measured and predictable way. That's Christine Lagarde. Wow. Are they really going to sell their bonds? Come on. Come on, everybody. Do you think so? I don't think so. But it's just fun to talk about. It's gotten cold in Europe, the economy is tanking, and the natives are getting restless. The only answer, blame America. And this is basically just an article talking about the two sides of Europe and the United States clashing head to head. They do not see eye to eye in many ways. Of course, they're partners in other ways, but it is important to see what happens here. When you've got a problem, you have to point the finger. You have to say, it was that person, it was that group, it was that country, it was that company. They are the ones that were responsible. In fact, if you look at the most successful YouTube channels, if you look at that, what do? They always have to label somebody as the bad guy. They might want to label a political party as the bad guy, or they might want to choose a particular individual, label him as the bad guy, and you're going to get a lot of the audience to support you. This is the same exact thing in movies. They use this. Hollywood uses it all the time. And they have to actually have a identifiable bad guy. That's why when you see a lot of videos about maybe the Federal Reserve or so on, and you don't exactly point to who the individual is, or you say the government, this is not really good. It's not really a high success thing, because people start asking, why, who's they? Who are we talking about here? And that's just the way it works. People want a bad guy, even if it's not true. They just want something to be able to point the finger at. And this happens all the time. So the point here is that we need to look at what's behind all this. And of course, who is it? It's the central banks and their activities. The central banks are responsible for all the inflation. The central banks are the ones that have created this mess in the first place. And if you actually took the time to understand the history behind the central banks, it all makes sense, okay? They create an inflationary policy, they have a boom, they have a bust, and they create problems. What could happen here is that if you start to see real estate tanking, we could see things like equities absolutely soaring into a bubble beyond what we saw before. This was the biggest bubble, and still is today, the biggest bubble ever in history, and they want to actually inflate that further, and it's going to be a disaster if they allow this to continue. You had Elon Musk suggesting, hey, the Federal Reserve needs to reduce interest rates immediately because we are heading into a recession. He's the one who said it's a mild recession incoming, and he said, I'm not one to predict, but I think it's going to be a mild recession. So if that's the case, what are we worried about? Why don't we just, stamp down inflation? I think it's wild to see all this, but anyway, that's the world we live in today. I wanted to thank you for being here. Do not go away without hitting that subscribe button, because this is the latest and greatest information that you are simply not going to find anywhere else to this degree. I tried to bring you as close to the sources I possibly can all the time. If you found it informative, don't forget to hit that like button. I'm going to bring you videos each and every day. I'm trying to fix my setup here. It's a little bit messed up, but bear with me as I go through all of this. Bought a new piece of equipment, trying to make this better, trying to, just basically do my best. That's all. If you found it informative, subscribe on the way out. I'll see you tomorrow.